Hi, everyone. Thanks for showing up, I guess. We're 25 people now, so I'm just going to start it. The rest can join later. Yeah, I think from the talk right now, we realize there's some New Zealand over here. So we have Andrew, who works for Easy Crypto. Easy Crypto is actually a New Zealand exchange that have moved to Australia as well. I'll let Andrew introduce himself and talk a bit about what they're doing. Then I'll let the rest of the panel introduce themselves.
Yeah, thanks, Omar. Yeah, so Easy Crypto, myself, I'm the Aussie head of Easy Crypto. Started over in New Zealand with a brother-sister team, Alan and Janine Granger. Janine's sort of the finance side, the administration side, the marketing side, the networking side. She's a jack of all trades and really good at everything. And Alan is the development side. He just loves to solve problems, and one of the things he decided to solve was how to easily get crypto to your wallet. He started programming and went from there. So they teamed up together, and they've gone from strength to strength to sort of become number one in New Zealand. I wouldn't say we're a traditional exchange. We're more like a brokerage. We're like a fiat on ramp. We're non-custodial. We allow users to send crypto directly to their wallets or to an exchange wallet or anything like that. We don't actually hold crypto on their behalf. And basically, I was involved in a lot of social over there, and I brought it over to Australia. So I'm the head of Australia. We've been live for about a year here, following basically the same thing as NZ, and we're looking to get the same sort of growth.
Nice. Oh yeah, thanks for that, Andrew. That's nice. Scott?
Yeah, hi everyone. I'm from Ad Hoc Private Equity, so I work for an investment fund that looks at a lot of different startups. A lot of our deal flow does include startups that have blockchain type mechanisms or concepts within their products. So I do see a lot of interesting investment flow coming through to gauge where the technology is at from that perspective. Also, avid trader. I've been trading since 2011. Crypto-wise, got sort of interested in about 2012. I think I mined about 20 Bitcoins at one stage and sold them off for a penny or something ridiculous. So I think everyone's got one of those stories where they've sold way too early. But obviously, participant in the mining store community, started mining seriously again at the start of this year. I'd always been wanting to go back into it, but I thought it was a great time. Crypto seemed to be picking up again from the highs of 2016. Thought it was really good timing to get back into the mining side. I'm got some interesting perspectives, I guess, on the investment side of where things are at with the technology I can bring to the table.
Thanks, Scott. So guys, just before I let Tom introduce himself, so I've put the link for the Mining Store Discord over there on the chat. Mining Store have given us a channel over there where Whisky and Wicks attendees can join in. Once you join in, I think you'll get a week free over there. So we just talk about trading strategies over there, mining, things like that. So just click it, join it, it's free. And yeah, Tom.
Hey guys, how you going? Sorry we dropped out there briefly.
No, that's fine.
So I'm doing trader education over at Mime. I've been trading for probably about 15 years, including a professional stint over at PropX and all kinds of instruments, all kinds of markets, and started working with Grant over at Mine about 12 months ago, and taking a keen interest in what's going on in digital assets.
Yep, it's a very interesting space, and I think we're going to see a lot more interesting things in the years to come. We have Cloud Juice back with us again. Juice, do you want to intro yourself again real quick?
I'm a crypto trader, got into it about 2017, was going to make the jump to Forex this year, but crypto sites have started trading Forex, so I'm here for a bit longer. Yeah.
Yeah, it's fair enough. It covers it. So back to I guess let me just get back into it. So we were discussing something interesting right before we had to go live, and Juice was asking Scott if the government wanted to ban crypto tomorrow or control it, how could they actually do that, considering I have Bitcoin right now and I can spend it wherever I want? So how would they actually do that? So Scott, I'll let you continue, carry on with your thoughts from there.
Yeah, sure. So, I mean, a lot of the central banks have sort of talked about a lot about the introduction of potential digital currency of their own. We've seen headlines over the last 3 or 4 months, even from China, Russia, and a few other European countries contemplating it. The RBA here in Australia, they've been quite transparent about it, that they're thinking about it. They've had a couple of investigations into it. They've asked for public comment into it. So it's on the minds. It's on the minds of the government. I guess one of the things that we just need to consider here is that we're sort of in unprecedented times. We really, the governments are spending a lot of money. They're going into debt. They're going to be worried about how do they actually pay off the debt. One of the biggest things about paying off large amounts of debt is the easiest thing to do is to inflate the currency away. And only the way you can do that is to have control over how it's spent. They don't want to go down the path of Japan, which has sort of been in a deflationary stagnation type environment for over 2 decades. They want to actually be able to stimulate the economy enough to actually create inflation in a controlled manner and hopefully over time inflate the currency away so that the debt they're accumulating right now become manageable to actually service. At the moment, if you look at the US, it's just very problematic. And even in Australia, we're talking about, generational type of time to pay off with normal sort of mechanisms to do it. So I think they're going to have to think outside the box. And the thing is, at the moment, is the only way they can actually control spending is to put some form of control over it. And digital currency is probably the best way to do that. Let's look at it. At the end of the day, they can issue a currency. They can actually stipulate how it's spent, how long it exists. So, for example, they could put an expiry on a digital currency and say, hey, we'll do equivalent of, say, universal basic income, UBI is what they sort of call it. Everyone gets paid a certain amount of money, but you've got to spend it in this area of the economy and you've only got 30 days to spend it. And if people aren't spending enough, then they'll just, decrease the amount of time that the currency is valid. That way, you will stimulate the economy. You will get people going out to spend because they don't want to lose that money. And if you think about it, the concept of negative interest rates, which hasn't really worked using normal fiat currency right now. Europe is an example where they've tried many different mechanisms to stimulate spending through negative interest rates, and it hasn't really worked out for them. And in fact, what actually happens is most people tend to keep the money in the mattress or they hide it in things like Bitcoin. They don't necessarily want that to happen. They want people to go out and spend the money in the economy rather than save. And so if you think about it, you've got this asset, digital asset called Bitcoin. It's free. It doesn't have any imposed controls on it. It's the sort of thing they don't want to actually have a lot of people invest their money in because they really want to get that economy stimulated again. So if you think about it that way, the digital currency looked very inviting for a lot of these, especially the Western countries. It's one of those things where they could introduce something. They could look at some of the technology that's already been created out there, not necessarily Bitcoin as a platform, but there's a lot of other payment type blockchain technologies, projects. A lot of them actually could be really useful for digital currency issued by a bank. And so they will be looking at this and seriously contemplating it. So it would be the opportunity to do that is now. Like they've got an excuse to do it, if you know what I mean.
No, yeah, definitely. I mean, cash is literally the most anonymous currency there is, and introducing digital currencies everywhere that's it. We become all traceable. Every dollar, where you spent it, where you took it, where you went.
Well, that's the thing, right? I mean, they can track every transaction that people make. They can get rid of the black economies that way. It's a perfect solution for them. They just need an excuse to do it. And the environment as it is today seems to suggest that it's a really good time for them to think about it seriously. You've got to think about it this way. At the end of the day, you've got, like, for example, a perfect example is COVID-19 Safe as an application, right? So you've got this huge distribution of an Android and iOS application out there. Within 4 weeks, they got 5.5 million installs in Australia. Now, MyGov has been around for a long time, right? And they've spent millions and millions and millions of dollars trying to get people to get involved with MyGov. And within 4 weeks, they've actually been able to deploy application to majority of Australian smart users, smart devices out there, without a lot of marketing and a lot of education, and they've actually got a presence, a digital presence on everyone's smartphone. That's very inviting for a government. Like, it's very exciting for a government because, they've got a vehicle then to communicate directly with that person, and potentially have a vehicle to evolve the application that is COVID Safe 19 to something else. Like, over time they might introduce some sort of identity type stuff, like an Australia card equivalent in digital. Or the alternative could be that they actually start introducing a digital currency. They've got a presence, they can create a wallet. You can see these things starting to happen. If you're a government right now and you're looking at the success of the COVID-19 rollout, you'd be going, there's an opportunity here. There has to be.
Are you thinking that might be directed by the US, or that maybe globalist organizations, the IMF or the World Bank or something? Because, it seems like the US is trying to escape their role as the world's money to some degree.
Yeah, but you know what? Like, Australia is seen as really innovative in this space. Like, we are really early adopters of things like payments. Look at how, how we rapidly took up tap payments, PayWave and all that sort of stuff, contactless payments. And you compare it to the US. The US, it's like going back in the prehistoric age, right? They're still trying to deal with chip and pin, let alone, PayWave. And like Apple Pay and those sort of payment systems, the US is not very well entrenched at all. Compared to Australia, Australia is far more ahead of the US in payments. We compare quite favourably with some of the sort of best places in Europe in this case. So, and the thing is, we're a small population compared to the US. So, we're good as guinea pigs. We're early adapters of technology. We've got high penetration of smartphones. We have a disproportionate penetration of iOS compared to most of the world. I think it's somewhere in between 55 and 60% penetration of iOS out there versus Android, which is dominant in the US, and in Europe it's a little bit more sporadic. But, we have some really interesting features as a country that's very attractive for trialing new things. And I think, the RBA overall is quite respected in terms of the central bank globally as well. So, it's an interesting market. I think that Australia has a fairly good opportunity to get in there and actually do some innovation in this space, whether it's using local technology or maybe something that's developed overseas. But I think that, it's going to be a project that we probably know already that will be sort of the Genesis framework for what gets deployed, because one, the timing of it, and two, governments can't build this shit by themselves. They just fail at this sort of stuff. So they'll be looking at something else that's already out there that sort of cuts the mustard.
I think generally speaking, us moving to digital currency is not a bad thing for Bitcoin, just because it eases. If we all had digital dollars, it'll be much easier for me to move my money into crypto. Andrew, you'd be more capable to talk on that, but I guess the point of switching fiat into crypto is the biggest bottleneck at the moment, is how do I get my money into thing. Another thing I wanted you to talk on, you probably see that on, I've been hearing, a lot of people have been asking me about crypto lately that are not crypto people. I've been getting a lot of, like back in 2017, although prices are not up. Are you guys seeing that as well? Are you seeing a lot more new people?
Yeah, definitely. It's got a bit of that vibe of 2017 about it around the halving. You just need that larger type of event to get people pumped up back into the space from the grassroots level. And you definitely see that disconnect between understanding what crypto is to getting someone to download a digital wallet, and be able to securely store their asset without losing or having it compromised. So one of the biggest things we like to look at with new customers is ensuring that they understand how a wallet works, understand how to back a wallet up, and understand that Bitcoin isn't, the amount of people that purchase and think that Bitcoin is something that's just going to earn them money passively, like some sort of passive earnings scheme, almost like like a pyramid scheme or an MLM, and they've got this sort of they look at it that way. But our biggest challenge is getting people to understand digital wallets and how to secure a digital wallet. So speaking of governments issuing a digital currency, I'm not sure how they would get people to secure or use private keys or what that would look like or how they would take form, because I know with some of the I think it was ASIC a little while ago tried to use a private key system to connect to their system. I can't remember what it was called, but it got no uptake at all, and no one really seemed to use it. It was all crypto based, I believe. So there is challenges there, and in the general public, it's always going to be a challenge just making it very simple to purchase, to download a wallet and use it.
I definitely agree. That's why I sort of suggest that it's going to be an existing project that we know that they'll adapt, because problems they know that they're not the sort of best people to actually be able to create these things. They'll look at stuff that's already been solved and leverage on that.
Sure.
Talking about that, let me just open the Bitcoin chart. So yeah, Bitcoin, what's everyone thinking? 9,767 right now. What's the general, who wants to go first? You want me to let you go first, Juice?
Yeah, I honestly thought down, but I don't know, if it's new money, it's pretty irrational. I didn't think we'd get back to 10. No way.
No, I still thought that we'd bounce to 10, but do you think we're going to break 10?
I'm no at the moment, but obviously I say that when I'm 100% in Bitcoin. So
yeah, I'm like you. I'm sitting in my Bitcoin, but I have my shorts open because I just don't think we're gonna break it. I don't know why. It just doesn't make sense to me. It sounds too easy if it just decides to moon over here. Andrew?
Yeah. Look, I think that 10K mark is just a psychological barrier for a lot of people. And I look at my customers again that are usually spending, looking at the more grassroots level. So as soon as you see that 10K, people are thinking, oh, should I sell? Should I sell? Should I get out? And, comparing it to when we were talking about, 2017, the halving, everyone jumped in really expecting and really looking for Bitcoin to kick on from this event really quickly. So, I'm going to sit on the fence with this one and think it potentially could go on a run because of that. I think there's still a lot of positive sentiment off the back of that. So, I'm going to go on the bullish side of things with Bitcoin at the moment.
Okay. Scott, anything to add there?
Yeah, no. I'm just listening. I don't know. I've been following the S&P 500, right? So S&P 500 is very illogical at the moment. The money's going in where it shouldn't, and the valuations are ridiculous. And I think, looking at what Bitcoin has been doing alongside the S&P at the moment, it's sort of been, it's not highly correlated, but it's correlated to a degree. And at the moment, S&P is looking pretty toppy. I think it's, triple top time. And that usually means, if it fails a triple top, then it's down for a significant period of time. It would be bearish for a while. So I don't know. I'm surprised, like everyone, I think, about the value being keeping up. There was, a report just came out today that talked about the hash rate dropping 20%, which is probably expected, I would have thought. And the hash rate difficulty reducing 6%. That was based on, basically a week in the 2 weeks of the halving rate. So we'll see the difficulty reduced a little bit further, I think, in the next set of block, which is I think another week from now. But at the end of the day, I'm quite surprised. I think it's held up much better than I thought. Some people say that everyone had priced in the halving already. Well, I'd say, well, how do they know what the halving pricing should have been, right? It's, on what metrics or what value they've actually determined that. I'm surprised. If it goes above 10, it will stay above 10, I reckon.
Yeah, I agree with you there.
But we'll have to get through that big resistance up there. So I'm watching. I'm not in BTC at the moment. I'm just watching. If it goes down, it's just another price opportunity to get in again. So
you brought something interesting up, that whole S&P thing. I mean, this whole us being correlated with that, to me, just indicates that there is smart money in Bitcoin. However, that smart money is treating Bitcoin differently than how I treat it. As in, they view Bitcoin as a high risk, high reward asset rather than a safe haven as I would view it. And that smart money will dump it once the S&P dumps, because to them, it's just another asset. So that's, I mean, yeah.
Yeah, look, I mean, the thing about the big investors, I think they like to play in futures and options. That's where they make their big money, the hedge funds, everything else, not in the physical asset itself. Paper Bitcoin versus real Bitcoin, sort of same as the gold market, right? I mean, I think in the gold market, futures, it's like almost like 50 to 1 paper gold to real gold out there. That's where they make the money for the movements of paper assets as opposed to physical assets, which I still consider BTC as a digital physical asset, if you know what I mean. But it is real. So so I don't know. The one thing that's a little bit different this time around is, and I guess the metric to watch is the number of new addresses coming on board with Bitcoin. So addresses, where we see a large spike in that, then we'll start seeing speculation coming to the market again, and that will stimulate the price as always, right? But we do have to consider who's actually buying at that point in time and who's selling, because there's always a buyer and a seller, right? So it's where the smart money is moving into this market. There is traces that you can see on the price charts, as stock to flow type things you can do. Lots of different ways of measuring that, but it's worth keeping an eye on. I'm not sure whether we're there yet, and that's why I'm a little bit skeptical about the 10K. I think maybe we need another price down. There'll be some sophisticated investors that would have been on the sidelines before the halving and probably thought they'd have an opportunity to get Bitcoin at a much lower price. I think they're still there. They're waiting. So I think we need at least one good move down to get those sophisticated investors back in and drive the price.
Okay, I mean, we had Paul, what was his name? Paul Tudor? This week saying that that's what I'm thinking of. Saying, what do you call it? Giving Bitcoin the okay. I mean, the thought that keeps resonating with me is more that Bitcoin is becoming a legitimate asset, and even if it's young, even if it's in infancy, it's a legitimate asset now, which is why I tend to not worry too much about the whole can we ban it thing, just because that's it. It's an asset. It's here to stay. I mean, you could try to regulate it, but it's not going. It's too late to take it anywhere. Too many people know about it now.
What do you think, especially Scott? Sorry, but in 2017, when Bitcoin went nuts, the S&P was going nuts as well. Is that right?
Pretty much, yeah.
So what about this time?
It was about 1,500 on the S&P, and it doubled that.
So what happens this time, you think, with Bitcoin going all right, and if S&P does triple top?
I don't know. It will be the real test, won't it? Whether people treat it just like another asset, like a commodity, like a general commodity, like oil or silver or gold, or whether they treat it something different. Is it a safe haven? I don't know whether the recent behaviour over the last 2 months suggests that it actually is treated in the eyes of most people as a safe haven at the moment. Some could argue, but my sort of view of it is it moved in correlation with everything else down. And that's just the reality of it. When people need to liquidate their assets, it doesn't matter what type of asset it is, whether it's gold or whether it's stocks or whether it's Bitcoin, they need to get cash, they'll sell it. So it will depend. At the end of the day, momentum driven by the S&P, there's a lot of money exit. People get margin calls because they're very levered. And that means that some of the things that they don't necessarily want to get rid of, like, for example, gold or Bitcoin, they might have to. And that will drive price down. It's typically how it works.
Yeah.
It's very surprising.
It's a bit tricky to use that as an example, that liquidation, because it was very much a one-off event. Because it's gone one direction ever since.
Mm-hmm.
I mean, that has to be in Bitcoin's favor as a store of value, and also how it's sort of being perceived. I think, like in moments of that sort of mass hysteria, there's always hypercorrelation. So I think that's kind of like to be expected and probably needs to be forgiven as well, in terms of how you would look at it long term, where it fits in.
Yeah, I don't think anyone's an expert in this area. We really aren't in times that we have a lot of precedent to base our assumptions on. Just more recent behaviour. There's been some really positive headlines coming out of the news on Bitcoin recently. I noticed on some of the Today shows in the US, they're starting to put Bitcoin in the ticker underneath. So it's becoming a relevant statistic for a few people. But certainly 4 years ago, we didn't see that. So I think it, we are seeing the transition into more mainstream, adoptance of it or acceptance of it, or awareness of it. It's a little bit different to 2017, where it was a lot more isolated to certain people or certain groups of people that had a awareness of it. It's when your mum and dad start asking about how they invest in Bitcoin that you start knowing that things are changing.
That's what happened to me yesterday. My mom called me asking, but apparently the reason she was asking was because it keeps coming up in the newspapers. But the only difference I'm noticing this time than last time when people called me asking about it. I remember the first person last time to ask me about crypto, 2016, 17, when that run was happening, was my barber. And the reason he was asking is because he had 25 grand to buy a car and he wanted to put it into crypto and buy a C63 AMG. He thought he could turn the 25 grand into 125 grand. And he was asking me if he should buy Ripple and just hold it, and that would happen. My response to him was, trading is trading. I can't recommend that to you. But everyone was doing it out of greed. This time, the only difference I'm noticing is the people, I've been asked a couple of times now, and people are asking me not because of making money on crypto, rather loss of faith in the banks.
Yeah.
My mom was asking about banks potentially failing. Again, it's probably the news. They keep feeding them that stuff. But their concern is, if the banks fail, is this actually a valid option?
I've definitely, I've been amazed where I've had 70-year-old customers come to me and say, I don't trust banks, and just throw, a significant amount of money into crypto and really do well. And I was completely surprised by some of the, more mature, customers that have come in and just said, look, I'm getting jack of this, my super's gone down, and I need sort of a kick, a boost from somewhere, and I'm starting to not trust what's actually going on with the government. I usually find, people at that age are starting to look more conservatively towards their retirement, and it's amazing to see this. I guess it's not a risk, but it's definitely not something they're accustomed to, and they're willing to give it a go. And to see that really puts my faith that anyone can step into the market, and it's open to anyone to own a wallet, to hold a wallet. And that's the biggest, like I said earlier, that's the biggest issue, is getting that adoption at the grassroots level, which I'm really passionate about. I think that the more people that can even just hold a wallet with a few dollars in it, a few small amounts of Bitcoin, the better. And it's just, yeah, it's just an amazing thing to see people moving super funds from super funds to Bitcoin. I just I'm amazed by the amount of money that flows that way.
I mean, that literally goes back to what the digital currency, the national digital currencies thing. I think the biggest barrier is, as you said, is people managing their own keys, learning that you can't call a bank. There's no such thing as Bitcoin to call. There's no, I mean, we had the whole J.K. Rowling thing happening over the past week on Twitter. I mean, she actually atted Bitcoin. I think she thought she was talking to Bitcoin. The problem is there is no representative. There's no person. If we actually move towards national digital currencies, which again, I am very against because I don't want anyone knowing my spending habits. I don't want the bank to refuse me a loan because I get too much Uber Eats. That's not how I want things to happen. But once people do switch over to that and learn the concept of how I hold my own key and how that happens, I think that's a much easier stepping stone to go from there into Bitcoin than it is from nothing into Bitcoin. That's just how I say it. It's a little bit, it's just a little bit more education for people to understand what this is. I also love that type of adoption that you're talking about a lot more. To me, I think people realizing that Bitcoin is another asset, like thinking about it the way you think about gold, is a lot more valuable to us than people talking about Lambos. Because that's not the image we want. We don't want people to think this is what people do to make a quick buck. We want them to know that this is revolutionary technology, changing economics.
Well, I think you're speaking about 2017 before, and I really think that hurt us as much as helped the industry. You got a lot of mass hysteria, a lot of people jumping on board and getting burnt, and I'm talking everyday investors, I'm talking everyday people, and the come down off that was pretty bad. But I can definitely see the strength of it growing back from there. But we've lost a lot of people for a long time. We've lost a lot of people forever in that sense. So it's about continually, doing the right thing in this community to get the right people involved, to avoid scam type behavior, and building up that confidence in it as an asset and as a normal kind of thing, to own a wallet, to be able to do small transactions between each other to test things out, and to hold a small amount of crypto as a hedge against other assets.
Was it in New Zealand that guy at the peak of Bitcoin last time sold his house and went all in on Bitcoin? I thought it was a guy in New Zealand. I don't know how he's doing now, because he did it right at the top of the market.
Yeah, I think I know what you're talking about. I'm not too sure. I do know a guy in New Zealand who sold his house and bought, kitted out an entire administration building with a heap of graphic cards, and he just mined all sorts of ERC20 tokens and did really, really well. That was, I met him over in New Zealand actually, and that was a pretty crazy story. Just went all in on it and managed to do well out of it. So sold at the top. That was interesting.
Yeah.
Okay, I have a question from Harrison. Is anyone familiar with the stock to flow model?
I am, but only briefly. Like, it's just one of the things that you read about. You do sort of.
I mean, we spoke about it. We got asked the same question last time. I think most of the panel wasn't really that aware of it. I do personally know what it is, and I expressed my thoughts to it as it's a theory.
Mm-hmm.
That's interesting theory, but that's it. I mean, do you have any other thoughts on it? Do you have anything to add on to that?
No, because I really, as I said, I've probably just done a cursory glance and I've gone, what is this thing? And read a couple of articles and just like, okay. It's not something which I sort of think about at all, more than just when I read an article, it has it mentioned, I know what it means, but that's it.
Yeah, no, definitely, I agree. I mean, I've looked at the model a few times. I mean, it's a correct theory until it's proven wrong. That's what I guess it is. I mean, there's not much. If it's right, by all means, I'm happy to see Bitcoin at those prices. But Lloyd,
being a more avid full-time trader, you would have investigated it a bit.
Who? Me? Tom. Uh-huh.
Tom. Yeah. So I have actually written a piece on that, and I think that it's an interesting idea. it kind of speaks to classical economics, similar to the equation of exchange for currencies, which is it's sort of an idea that if you match up supply and demand, that you get an idea of what the price is. And I think that anyone that's been involved in markets in any capacity knows that their decision making can't really be linked to the assumptions of those models. And so just off the basis of that, similar to like the efficient market hypothesis, I think you should be sort of questioning the basis of that because of that. So anyone that's ever traded, that's ever made a decision, they should sort of be able to question either the equation of exchange or the stock to flow model. At the same time, obviously, there is a minor supply shock, but I compared what the supply shock actually is to the amount that is traded every day, and the reduction in supply gets buried in the amount of Bitcoins that you can buy on every single exchange right now. So it's sort of a tough sell in the short term. It's probably a better sell in the medium to long term. But yeah, I mean, interesting stuff. Everyone's still digging into all of this and trying to figure out what it all means and how to model Bitcoin and how to price it. And it's probably a piece of the puzzle.
Yeah. Another question from Lloyd. Why do we need government currencies?
So we don't. We don't need. It's not us that needs it. It's the government that needs it. They need a way of being able to control spending in the economy, and especially now where there's a lot more debt, they need to be able to inflate the debt away through inflation that they can control. And that just means that they just need to know that they have some mechanism to control where the money is being spent and how it gets spent and how much it gets spent. So it's not, I mean, I don't want it. I certainly don't want it. I'm not an advocate of it all. I just think that is something which the governments will have an opportunity to look at now with an excuse of the COVID-19 being the catalyst for them accelerating their plans if they had them. And the other thing about the governments is they want to be able to track where things are going. There was a question before about, whether the US market would lead. My sort of view about this is that in some ways the US and China and Russia are probably the last people to adopt a digital currency when you think about it. The reason simply is that they have such a black economy and there's a lot of corruption going on. They don't want it to be trackable. And that's the thing about digital currency. It can effectively be tracked. And anyone can effectively track, the use of the spending of the money. So obviously then everyone's accountable. So in countries where there's a higher rate of corruption, they're probably going to be less supportive of a digital currency. That's national versus something like Australia, which has a relatively low level of corruption.
Yeah, no, I do think, I do agree with you on that one. And it's definitely not that we need the currency. It's more that they're going to have to. It's just the next logical step. Everything evolves. It's money's turn to evolve.
Yeah.
People want to talk about the institutions. So let's talk institutional money. I mean, we get to start with you, Scott. I mean, you're in private equity. You've spent considerable time in that side of the world, on that side of finance.
A lot of money on the sidelines, I can tell you that.
Yeah, how do you feel about where are the institutions and are they coming and when and what do they look like?
In the crypto space is or just more general? Like
it's more general. I think it's more about when are the institutions going to start getting into crypto?
Yeah, look, as I said, when there's more liquidity in terms like, the paper assets that they can do, the futures and options are the more opportunities. So FTX and those sort of guys introducing a whole bunch of different instruments and derivatives based on crypto is, I think, exciting for a lot of those guys to get in and actually be interested because not necessarily the real assets that they care about. It's just how much money they can make from movements and from natural things like hash rate reductions and, the whole, the features on hash rates is a very cool innovation. It's great. It also allows them to hedge, right? So hedge is one of the concerns for these institutions because the volatility of the market, having a vehicle where they could actually hedge against the hash rate reductions or increases and therefore probability of things like mining and whatever else and price that's all quite useful for them. So the more instruments that allow them to manage their risk better, the more they'll dap into this market for sure. And I think also the other thing is there is other projects other than sort of Bitcoin and Ethereum that these guys are interested in. There is wider investments in a lot of these projects. Chainlink and I saw some of these more identity-based blockchain mechanisms. So RegTech and FinTech type related blockchains, they're the things that they're interested in because they want to get exposure to innovation and disruptive industries. And that's a vehicle to do it. What's interesting is, the ICO route, I was around. My boss kept asking me all the time about ICOs and should we participate in them. And we had a couple of startups where we could have raised funds through ICO mechanisms as opposed to traditional sort of raising capital funds. We were quite hesitant in the end. I sort of held back on it. I said, look, it's quite an immature market in that sense. And I was glad. If you look at ICO results, predominantly most of the people who invested initially in an ICO lost money from it. There's a few standouts, but there's a lot of losses out there. And that's not the best introduction for sophisticated investors to get into this market. But I think now that sort of market's gone. So the ICO sort of thing is sort of history. And it's more mature projects coming out. The technology is maturing, the technology is evolving with a level of actual real benefit of projects. So some of the projects that are coming out now certainly have a lot more tangible benefit. They're more than just concepts. They're not more than just white papers. They're actually starting to achieve things. And that's where an interest in institutions are going to get a little bit more wider, right? Because at the end of the day, they can actually see that it's not as risky as before. I think a lot of hedge fund investors, if they had gone to the boss and said, let's go in this ICO and lost a lot of money, they would have probably left the industry by now. But I think now it's a different time. And I think, it's a level of maturity in the industry as a whole. So starting to get to a point where institutions are starting to see tangible benefits from some of the projects coming out now. And I think that will incite them to actually invest more overall. And it's, yes, okay, from a financial instrument perspective, trading coins and tokens is great, but I think a lot of the institutions are more into the more sort of tangible, disruptive natures of some of these projects that are coming out, and what it means.
Would you say that they are looking to these sort of blockchain projects now? In your experience, would they be looking at more of a private funding model rather than, looking to fundraise on it as an ICO, or
Yep.
The evolution of the ICO into the STO as a security token offering, or however they want to twist it into a more legitimate mechanism?
Yeah, look, when the ICOs first came out, my sort of view of it was that it was just trying to bypass the normal sort of hard yards of actually doing real capital raising, right? And for some projects, it worked really well. A lot of other projects really didn't deserve, they wouldn't have got any money if they had gone down the path of capital raising. They went down the ICO, and obviously the results are, they went down to zero. So a lot of companies that started that probably shouldn't have raised money in the first place did manage to raise money in ICOs. I think now a lot of the blockchain, the deal flow I see coming through to our business, a lot of the blockchain stuff is really quite matured blockchain concepts now, and they're asking for traditional funding to do it, with equity stakes in the normal sort of route, because they've sort of gone down that path or looked and investigated into ICOs and now have come back to more traditional ways of raising money. And I think that's just a sign of maturity.
Yeah, sure. Nice.
That's definitely good. I remember back in the ICO days, it was people raised ridiculous amounts of money for no clear reason. I was working at an ICO advisory based in Shanghai. We would write the white paper, post it, and by the time the white paper is posted, you have millions of dollars coming in. Guys, nobody's done any actual. Coming from from private equity firm, you know what people need to ask for to get money. You need to beg to get your first $500,000. Yeah, now you can write a piece of paper and you have 20 million out of the door.
Yeah.
And you're like, okay, what did I do with it?
I tell you, it was very tempting to actually recommend to do it with my boss, but in the end, I did say no. I'm happy I did.
I still think about it. What if?
Yeah.
Is it true secondary solution? So I have someone anonymous asking, is it true that second layer solutions like Lightning give anonymity? I can answer that. Does anyone want to answer that? So I can start it off by saying Lightning, for example. It depends what second layer solution you're talking about and how you're using, what the purpose of using it for is. So for example, in Lightning, if me and Tom open a channel, all the transactions within my Lightning channel are anonymous, but you still know that I own the channel. So it is relatively anonymous. I don't think all second layer solutions are anonymous just because they're not. Depends what it was designed for, I guess. If it's designed to be anonymous, it will be. Does anyone have any other thoughts on that? I mean,
I must admit, I'm not really in tune with Lightning. The thing is, with this space, there's so many projects, there's so many different things going on. It's hard to keep track of it all. I don't even know where that's at. Where's that project at now? Is it close?
Lightning's good at the moment. It's up, it's running, it works. It needs time. There are some issues that can be fixed across time. It's definitely much better than when it first started out. It's a lot more user-friendly right now, especially with all the wallets that have it automatically integrated. So it becomes easy to send Bitcoin instantly, receive it instantly, create invoices. And yeah, as they said, within the channel, transactions are anonymous, so nobody knows how much I'm sending and who's sending it to who.
And I guess when it comes back on chain as well, the anonymity there can kick in, with wallets like Samurai and these transactions that you can actually do like conjoin or to actually anonymize transactions. There's still a big debate in the Bitcoin community about anonymity. So there's a lot of for and against.
So yeah, as Harris said, Harrison commented on it. He just said that Lightning is anonymous within the channels, but then once you get outside the channel and you need to actually settle the transaction, it goes back to normal Bitcoin. So if I know your address, then I can track you. But I guess again, it depends. Generally, when you're trying to be anonymous, the way I like to think about it is it depends on who you're hiding from. If the person you're hiding from is powerful enough, as in a government or a very rich organization, then chances are eventually they'll find you due to human error, not just technology. You'll eventually leave a trail which they can find. So it just really depends on who you're trying to hide from.
Do you think this is good for price though? If we go the anonymous route?
On price purposes, it's a very tricky one because personally I think everything should be anonymous. Nobody has anything to do with my business. It's mine. But I don't think you can actually legitimize something anonymous just because. I don't know how you'd bring that up to the government. Considering again we're in Australia. Over here, I can be the government can probably listen into this convo without any permission, any phone conversation, anything is just available. So I don't know how well that would go trying to legitimize something anonymous. Generally, anonymous things are used for bad things.
And I think one of the issues with Bitcoin in particular being such a high-noted crypto is if it does go predominantly anonymous, then the government's going to have a real problem. The government will probably step in a lot more if they can't do any of that tracking that they're currently doing. So, and this being the high-profile crypto as it is, that's we don't want that. We don't want that sort of hysteria coming from the governments there. So it could go both ways,
If you go back to what you said before, though, like China and America wouldn't want it because everything is able to be seen. If it goes anonymous, do they jump on board?
I think it goes against what the government wants.
Yeah, it's difficult in China. You can't have anonymous in China. It just doesn't work.
No.
Surely there's some Monero wallets over there floating around.
I mean, obviously there is, but again, it just goes. I'm sure some people over there have stacks of cash that are hidden, but it's just the same headache that you would have to deal with both ways, and then spending it or using it. I mean, if they decide, assuming Bitcoin becomes anonymous, and now it's completely anonymous, nobody knows who has. I have my 10 Bitcoins. I want to buy something with them. The government can't ban Bitcoin, but what they can do is they can ban any transaction that involves Bitcoin. Effectively, I can no longer go to an exchange. I can no longer transact with somebody unless I'm buying something from the black market, which kind of puts a lot of pressure on it. And back to your question, Juice, it will cause the price to drop because less people are using it. It becomes less legitimate as an asset. Anonymous, again, anonymous, another one. What's he saying? So he says Craig Wright believes in privacy but not anonymity. Okay, I mean, any comments?
I wrap my head around what that means.
Should have left the name out.
Anonymity.
I know, I feel like agreeing with this statement, but now I have to just disagree with it because Craig said it.
Yeah.
I guess it is now privacy. I mean, yes, I should be allowed to have my own privacy, but I shouldn't be anonymous. But yeah, that's something to think about. Although I do believe in full anonymity. I don't know why anyone needs to know what I'm doing, where I'm doing it. I'm an adult. I pay my taxes. I should have the right to be as anonymous as I want to be.
Yeah.
There's sort of like market function in there as well, where people will self-select, say for example, money or currency based on whatever they think is the thing that's most like money or currency. So whatever digital asset manages to represent the idea of money or the idea of currency closest, they're going to be what people just naturally gravitate to anyway. So in terms of like governments getting involved with regulation, which are like, of course they can do, and of things like the blockchain kind of holding up or revealing who people are through transactions, I think that there's like a natural mechanism as well that operates, and that the winner of whoever can be the best money, which is probably Bitcoin, and whoever can be the best currency, which I think will probably be something related to Bitcoin, but probably not like a Lightning solution, not Bitcoin itself, will just emerge as a winner.
I think there'll be a middle ground, right? There'll be controlled privacy where you can, as a user, dictate who has access. So at least you have some semblance of control over how private you can be.
That the giving people access thing is interesting because that's another topic that's been coming up a lot, which is a lot of exchanges are getting asked this nowadays is how can I get my Bitcoin to my next in kin when I die? And I guess that's something that's going to be worked on a lot going forward is where do my coins go? How does someone claim my will? How do they find my keys? I mean, I guess it's easy if you're under custody, if you had a custody solution where somebody's holding it for you. But if you had it yourself, I mean, that's...
Yeah, we need more solutions around that, I think. The traditional put your private key in a lockbox in a bank or in another institution is kind of the only real way to go in that sense, unless you allow someone to control a password manager of yours and then they also own the master key to that, and how do you keep that safe? And there's a whole lot of things around that. But yeah, legacy Bitcoin is still to be tested, I guess, how you pass that on. That's such a young asset. Solving that, if someone can solve that in a very smart way, they'll make a lot of money.
No, it is definitely, especially if you think about it, it's what you said, the only way I can actually do it right now effectively, which is by giving my lawyer my key or by sharing it with my partner or with the kids or with someone. The problem there is that somebody else has your private key. No matter who it is, somebody has your private key. So it's not yours anymore.
Yeah.
Yep.
And there's a lot of identity, blockchain identity type solutions that could actually facilitate some of that. Thinking things like sovereign. Sovereign's a really interesting one. I mean, I have no idea why people trust LinkedIn anymore, because I could say anything I want, and I don't necessarily get called out on it about my credentials. And a lot of companies, obviously, they get called out. They employ a CTO, and he ends up having no degree at all, or didn't go to Harvard like he said he did, or whatever. But in the case of this, a lot of these solutions are about the relationships that an identity in digital form has with other relationships. So that could be spouses and family stuff. It could be connections through companies and trusts and directorships and all that sort of stuff. It could be with universities or places of employment, right? So basically your profile becomes this digital asset that then has these explicit controls of who can have access to what and for how long. And even using things like zero knowledge proofs, right? Being able to prove that you actually have got something like a degree without having to tell them what degree it is. Or, a certain example of that is age proofing, right? Proving that you're 18 without having to tell them what your birthday is. But part of that is, in the case of you expire, then there'll be some logic in those things that say, well, this is, in digital form, effectively your will, or how, you decree all your assets being split. So eventually in the end, you'll have something like that in place, because I think people only trust these type of things where it's completely decentralized but completely private. And the technology is evolving pretty quickly. One of the things I'm seeing is when you think about the web, right? The web, when it was developed, web version 1 and version 2, identity was sort of put to the side, right? Because it was too hard. At the time, technology wasn't there. And then in Web 2, predominantly, you had guys like Google and Facebook providing OAuth type solutions, which allowed their identity system to sort of be used by a lot of other credential requirements elsewhere. But that, again, you're dealing with a credential system that's sort of managed by a third party, right? It's a centralized function by some third party that controls your identity piece. Now, finally, with Web 3, they're starting to actually define real standards for identity, digital identity, and it is based on a blockchain type scenario, but it's open. So it's a protocol where multiple sort of frameworks can interact and operate. And it's a really clever way of doing things, and it's finally here. Well, it's in final form of specification now, but it's really interesting to see how, once that framework's in place, how it will actually evolve to do things like we've just talked about, having this way of being able to find the heritage of your assets through to other third parties in a controlled and managed way. So I think that's a really exciting part of the future of crypto in general, is how the reg tech environment, the fintech environment, and legal tech all merge into one. And there's, not one cryptocurrency is or coin's gonna solve all the problems, but they're gonna be able to interact with each other and collectively solve those problems.
I have another interesting. Let's change the topic up a bit, I guess. The question is, what are your thoughts on Ethereum 2.0? What are the thoughts on staking? Is it a good investment? I heard of annual 4 to 10% returns. Okay, so first thing, everybody, this is just a disclaimer, it's not financial advice, just our opinions. Nothing over here is intended to be financial advice. As far as the annual returns of 4.6 to 10%, nobody can guarantee you that unless you're actually lending out your Ethereum for that much. But yeah, Ethereum 2.0 and the staking is interesting thing to talk about. Anyone have thoughts on Ethereum 2.0? Is it actually going to happen this time? Are we getting closer? What are the thoughts?
I'll try and jump in here since no one else wants to put their hand up. Look,
I'm a Ethereum's not my thing really. So.
Well,
I was only going to say that you should sell your house and go max long, but then I wasn't sure if that how it would be received as a joke.
Yeah, I am actually long Ethereum at the moment, by the way, but technology-wise, I have no idea what they're doing or what they intend to do.
I think if you're purely in the crypto space, I think that we're talking about diversifying our assets. I don't I think maybe it might be a good play to put a bit in of your Bitcoin, convert it to Ethereum, and see if you can get yourself the minimum stake. But I'm not sure. I want to see how it pans out. There's been so many ifs and buts around Ethereum, and going proof of stake. And I remember writing about it, reading about it years ago now, and it seems like it's just dragged on with where Ethereum's actually going. It feels like it doesn't have a strong direction in a way. So
Yeah,
trying to see how that pans out.
I'm with you there. The whole debate about PogPow, is that the future or is it not? Obviously with staking. The issue about staking, I mean, look at EOS, that's been sued apparently by one of the key investors in the ICO because they declared that they would be completely decentralized with staking, and now they're suing saying they're not decentralized. So, is 21 individual, stake holders in the case of EOS, is that decentralized enough? What's the level of decentralization needed with staking to actually call it decentralized? It's a bit of a questionable thing about it. I don't know. Is it enough incentive to get 5 or 6% sort of return on investment for staking? I'm not sure.
Jake. Yeah, I'm putting Jake on. I remember Jake last week.
Yeah.
How are you, man? How are things going?
Good. Very good, thank you. Yeah, I thought it was interesting. The Bitcoin debate, I think, is something that rage on. It's not something I pay as much attention to. I'm more interested in the blockchain technology in computing and how that's going to evolve. And so things like when you're talking about oracles with Chainlink or Ethereum and what it can or can't do, that I find that really fascinating. But one thing just on EOS, as that really became a big challenger to Ethereum, one thing that they really focused on was this delegated proof of stake, right? So the idea that what Ethereum lacked was the transactional speed to be able to manage high frequency activity. And it was mostly for, if you think like mobile applications with the App Store, not technology, not DeFi, nothing like that. 2016, 17, the focus was let's get the YouTube version or Twitter onto a blockchain, so it was immutable and everything else. And so that was sort of the theory. And so EOS really went after that part of the market. And a lot of people were really dissatisfied with where Ethereum's progress was sitting at that time. It felt flat. They've got a much more conservative approach, very research driven. EOS's idea was that they could move a little faster. And so by not being as decentralized as Ethereum and using a delegated proof of stake, it's not too dissimilar to the conversations that people are having now about mining pools with Bitcoin, right? You're going to trust the source. You're going to get behind a delegated staker and you're going to load behind them. If that's not working, you're going to move that power away from those people and sort of support those that have got that right approach, supporting the community. And a lot of people moved off Ethereum onto EOS for that reason. And the feedback from those people that did that feel that they actually solved quite a number of their challenges on EOS as a platform. So while investors might feel dissatisfied, while some people think it was a scam and everyone's going to have their opinion on it, the companies that are just running pure applications on top of it, some of those companies are actually making really, really good money in gaming and other categories like that. So I think everything's just a matter of perspective of what the function of what they're doing there is. So much related to cryptocurrencies and blockchain generally is about getting money in and out, day trading, decentralized finance, what's happening with Wall Street, and a lot less about just really boring functional stuff like AWS. It is the secret sauce of Amazon, and it's the single most important thing for the backbone of the internet for most of the Western world. And no one talks about it. It's really boring. It's not what people want to talk about with Amazon, but it's the same sort of idea, right? Is the technology's got to be significant enough to move things. It's not all about price. It's not all about buying in and things like that. I think that's a conversation I'm really looking to hear more about of what people are benefiting from that.
Yeah. I mean, I just wish Stan would just shut up on Twitter a bit, he just gives that project a bad name because he's, effectively the head of it, even though he's the CTO. I think EOS as a concept really proved So scalability is possible with blockchain in a way that not many other technologies did. And it's good for that. And, I like the whole technology that sort of resolved around WASM, which is the sort of the assembly language for the web being incorporated into smart contracts. This is just a very smart way of expanding your developer base, right? It's all about developer take-up, and if they can develop a smart contract in C or in Python and be able to translate that, or even in JavaScript into a smart contract, then you just expose yourself to a lot more developers. So it had the scalability over Ethereum. It had ability to attract a lot more developers. And, the proof points were in the transaction throughputs, the block activities of EOS versus the others. But I think I'm a little bit more skeptical about it now. I think, there's a lot of other projects that are caught up and probably have learned a lot from the delegated proof of stake scenarios that have sort of eventuated with EOS and looked at other alternative ways of doing consensus. But yeah, look, at the end of the day, it was a really good evolution with EOS. I met Dan at Consensus in 2017, I think it was, when they launched it. And I really walked away quite impressed by him as a person at the time. I thought he was a great technologist. And he certainly had a lot of great ideas. I'm sort of sad in some ways that EOS, from a price appreciation, hasn't done what it should have done. I sort of think that it's probably worth a lot more than it is now, but I think a lot of that comes down to some of the other sort of external factors imposing on EOS as opposed to the technology itself. If that makes any sense.
Yeah, no, thank you.
Thanks for that, Jake. I have another question from Lloyd. So saying after the halving, the network fee went to $7.51. Will it increase to $100 if we have another bull run? Is he talking about Bitcoin?
I would assume so, I suppose.
Are the fees that higher right now for transactions?
I don't believe so.
$7 is a high price for a transaction, and that's more than my bank.
Yeah.
We need to get the ACCC on them.
That's what Lloyd is saying according to the Independent Reserve newsletter that the network fees went up to 7.51.
There's a kind of an interesting thing with that equation of exchange that I mentioned earlier, which takes a look at the velocity of money. And the idea is that the faster the velocity is, the lower the price. And so having some kind of fee on Bitcoin in its role as digital gold is not necessarily the worst thing, because it does slow down the velocity of Bitcoin, which kind of sounds counterintuitive, and that might sound silly for some people that want to use it primarily for transactions. But if it is used as a store of value, it's not necessarily the worst thing to happen. Just as a small aside and all of that, yeah.
I think the current fee is sitting somewhere around the $3 mark. If you want quickly, I think I might be wrong. I've just had a quick look, but yeah, I definitely think this is where second layer solutions have a place in the future, and yeah, it's minuscule to send a Lightning transaction, but it's still again, then you have the skeptics coming in saying, well, it's not on chain, it doesn't count, and it's that sort of interface between the Lightning network or other second layer solutions and the Bitcoin network, and getting people over the line on that and getting it entrenched to see where we can get that transaction level down low. And outside of that, as Thomas was saying, Bitcoin as a store of value, transaction fees they're more negligible when you're looking at it as a asset where you can store longer term. So that's my thoughts on it.
What to know? I had something, can't remember what it was though, but I had something. Yeah, but something interesting that I noticed yesterday was so Bitmex went down. Did you guys notice yesterday? And Twitter went crazy over it. I think the most thing that shocked me in it wasn't the fact that Bitmex went down. It was that Bitmex went down and the market didn't react to that. A few years ago, Bitmex went down, the whole market would crash. And it didn't actually react to that. How does everyone feel about that? I feel more confident in BTC's strength. But I don't know. What's everyone's thoughts on derivative exchanges in general? I mean, we get a lot of negative press that derivatives are manipulating the price of Bitcoin. It's not letting us see the real prices of anything. Like you mentioned earlier, Scott, with gold, is in its paper. Same thing applies to derivatives. It's all paper trading. It's not real Bitcoin being transacted. What does everyone think about the effects on
I just hope that Arthur Hayes is paid up in coconuts to the Seychelles Financial Authority, because that man's in a bit of trouble at the moment.
Oh, look, I think it all comes down to liquidity, right? Derivatives allows more participants into the market and more interest generally into the market. So the one thing I will note is, and I knew this would happen as soon as, the futures market opened up to Bitcoin. That was about the time that it was at the top of the market. And of course, the short selling started. Having that short selling in the futures, I think, helped drive the price down significantly in that period of time. Which is a pity. So it works both ways. Having those derivative markets can actually manipulate the market, unfortunately move it more naturally than it is before. So yeah, I'm in sort of two minds about it. I think there's some really good instruments that you could trade if you're a really good trader and you have the time and you're certainly not scared about leverage and all that stuff, to be able to go and look at things like some of the high leverage futures that are out there. Things like the hash rate future as a innovation. It's really, I think it's quite an innovation because it allows you to hedge in a way which is based on the natural sort of.
Especially if you're a miner.
Yeah, if you're a miner, if you're a Bitcoin miner, having that as a hedge when you're thinking you get to a point where the market's going to turn, and certainly events like, for example, halving. I mean, think about the halving opportunity in 4 years' time or wherever it is. Being able to hedge against that for a period of time, take a 12-month hedge on that halving. So extrapolate it out further. That would be quite an interesting trade. I'm sure they'll think of something to allow you not to do that.
That hash rate product, I think, is one of the most interesting financial products I've ever heard of.
When I saw that, I was quite excited. And it's only Bitcoin at the moment, but hopefully it extends to other currencies as well, right? Like Ethereum and some of the other majors. I think it would be really quite useful.
How cool is that?
No, yeah, definitely. I think also Harrison mentioned another point. He said there's more options for futures. That is actually true, especially after Bitcoin almost going to zero because of the liquidations on Bitmex, Friday 13th. A lot of people have let go of Bitmex. I think Bitmex is one of the most interesting and probably going to be a very sad story in this space, how they literally dominated the market, got complacent, and lost control because they weren't innovating enough. They just were happy with the market share and they stopped creating better and better products. And that's what happens. You lose market share. DGB, anyone playing with DGB at the moment, mining it, buying it? It's had a very good run. I know the mining store guys were keen on it. I don't know, were you involved with it, Scott? Were you buying it?
Yeah, I've got a few of my units harvesting away there.
What do you think about DGB at the moment?
Oh, look, it's dropped off a bit. I think Jared making his rants public over the weekend didn't help things. I understand the reasons why. I think if you're involved with the project for such a long time, it's been like 6 or 7 years in that space, 100% of the time we're thinking about Digibyte, you can get a little bit insane. So he needs a rest. He needs to take some time out, which is great. But the market sort of looked at that as being a destructive force against the price, and it's sort of moved off a little bit more than some of the other movements recently. So it's disappointing, but I think long term, Digibyte's got a good future. I mean, it's got a lot of the attributes that Bitcoin doesn't have in terms of speed of transfer, the transaction fees and the speed of transactions. And it's based on very similar technology. And I think also from a mining perspective, as I said to from the guys in the forums, from a mining perspective, it's great for FPGAs, right? Because you've got 5 different algorithms for proof of work. One of them is ODCrypt, and ODCrypt really is ASIC resistant in the sense that it changes every 10 to 12 days, I think it is. Changes its algorithm, which means that if you're producing ASICs, you really can't produce a machine to tackle that. So it leaves the opportunity open for FPGAs, especially, to come in there and actually do some decent mining. And, you've got an equal play against the other 4 proof of work algos. That's the way that it sort of manages and balances the difficulty across the different algos is really quite interesting. It's quite an innovative coin, to be honest.
No ICO.
No,
Yeah, it's been around for a long time. I mean, it's on
2014. Yeah.
Yeah, it's on. I remember it from back in. It was one of the few that existed back then, alongside Dogecoin, Ripple, Monero, the OG coins.
400 million in market cap, so it's not a small currency by any means.
There was a coin
What happened to
called
Dash?
Dash is still around. I was actually looking at it yesterday. I think it's primed for a good pump right now. It looks very nice on the chart, but I don't know. I mean, 2 years ago, a Dash node was worth $1.5 million. Right now, they're going for about, was it 10 grand?
10 grand.
I thought it'd be about 100K.
Sorry, 100 grand. Yeah,
100K.
grand.
Yeah.
I was going to say.
And they were $1.5 million. That's
Yeah.
I mean, they're pretty positioned for a currency, though, aren't they?
Yeah, they've been used in South America. I've heard in Venezuela and stuff, people have been using it as a currency. And Dash is actually pretty anonymous, and but I don't personally know much about it.
I think it has a mix. It has a mixing type function built into the standard wallet. I believe there's a bit of controversy about how it was created. I think there was a fair bit of a pre-mine there. It was originally called. It had a few names. I'm pretty sure that I may be wrong here, but I think it's gone through a couple of name changes. It was something X back in the day, Dark X or something. But it's got a lot of controversy in its early days, but I think that it's still super popular.
Yeah, wasn't it Bitcoin Dark, I think?
Something like that, and I think it may have rebranded into something else and then rebranded again into Dash. And due to a pre-mine or something around the original coin, people, because people could build up masternodes, and then with masternodes gives you, when you own a masternode, you get given, voting rights over part of the network. People started talking about, those early adopters having more power by owning multiple masternodes, etc. So I'm still a bit of a fan of it. I've mucked around with a couple of the clones of Dash with masternodes and things like that, just to tinker with it. So yeah, it's pretty interesting.
Do you hold any Monero?
Personally, no. I can't say much about that, to be honest.
Yeah, that's my privacy coin of choice, Monero.
Yep.
That's the one I've always stuck with. But yeah, we don't have nodes. We don't have any of that. That's the only coins I actively hold are Bitcoin, Dogecoin, and Monero. That's.
How does Monero work privately? Can you send that to anyone?
Yeah, you can send Monero to anybody, and it's completely anonymous. It's all mixed up. You can't. It's causing some problems though nowadays, because when you deposit Monero onto an exchange, now exchanges want to know your KYC, where the coins came from, blah blah blah. It's becoming a whole thing. But it's provably so far been one of the coins that you can't actually. I mean, it's the most anonymous coin out there. I believe Loki are a fork of Monero. So Loki is an Australian project. Big fan of Loki. They're a fork of Monero, and they essentially have the same protocol running. But yeah, it's pretty solid in terms of hiding yourself and being anonymous. Unless you tell anyone your keys, you can't. I mean, the other day I found an old laptop of mine had a wallet from my mining days. I was trying to check how much is on my wallet without actually taking out the private key and opening the wallet, and you can't even see it on the blockchain. That's just irritating.
Yeah, it's from a compliance point, point of view, when you're looking at KYC AML, it's one of those ones where, if you want to avoid trouble, you you really have to be creative in how you approach that coin. So a lot of the time, exchanges will avoid it just because there's a lot of administration around it. So that's the take from sort of like an exchange point of view.
From an exchange perspective, Andrew, you're getting a lot of external pressure on the KYC AML. Is it increasing?
Look, for those that are not aware, we got AusTrack that track, all financial institutions in Australia, and that's what DCEs or digital currency exchanges are part of. Look, I've found AusTrack pretty good to deal with so far. I've had meetings with them direct, and they're pretty open to dialogue around the digital currency industry. But they're definitely like anything. You've got your reports you have to do. You have to make sure you're following up on everything, and the onus really is on the exchange to be on top of things, because if they decide to audit you, you're in strife if you're not covered. But AML, KYC, AML, CTF, internationally, it's a big talking point. Janine of Easy Crypto New Zealand, one of the founders, she is actively involved in the blockchain, blockchain society over in NZ, and also she likes to put her hand up for a lot of AML, CTF stuff, and she's constantly coming back with evolution in best practice from around the world. And we try to keep on top of that, because it comes down to, we do want to see this space grow. We also want to see it grow safely without, criminal enterprise involved, without, all those kind of bad things. And that's the hard balance to have between what we were speaking about earlier with privacy and being able to stop money laundering and those sorts of things. So crypto is such a strange beast when it comes to some of these debates that we have, every day.
Back on the topic of if it's banned, what will happen? Will they just ban it and then you're stuck with this wallet, or will it be an amnesty?
What do you mean by ban?
Banning crypto.
Oh.
I don't think it'll happen, but if it does.
Look, I think the only precedent you have is what happened with gold back in 1930s, right, in America. Roosevelt, he basically made it illegal to own gold, and he allowed people to hand it in at a fixed rate. I can't remember what the price was, and then he, after he got all the gold, he then went and marked that the value of gold is actually 56% higher than what he paid for. And that was used obviously for the monetary system basis. So that's the only thing I can think of as like a precedent you could think of in this case, where a financial asset's effectively been taken away from people through regulatory means like that en masse. In that case, you would say, yeah, okay, maybe there's an amnesty where people have an opportunity to exit out of it by a certain period of time, if that's the case. But I think the problem with this is not a localized thing. If Australia did it and no one else did it, then it wouldn't make any sense. People just move stuff or keep it outside of Australia. The only way this would work is if it's actually a coordinated effort coming out of something like the G20 or something like that, where they've just decreed that's the case across the world and that's what they're going to do. And I think the problem with that is there's people with sufficient amount of investment in this that the last thing they want is to have a lot of people up in arms and actually causing riots and stuff, which could happen. I mean, people get emotional about things, especially things like Bitcoin. If you're taking stuff away from people like that, I think in today's society, it would be a lot tougher to implement for that reason. I think it would be tough.
I think that culturally that government attempts to sort of confiscate anything these days is going to be a lot more difficult than 1930s as well. Yeah,
I think I also think the Australian economy needs to look at fintech and blockchain and all this digital currencies, etc., as a way of stimulating our economy with good solid projects outside of some of our more traditional markets that we employ. So we want to go into those STEM sort of areas, and I think that banning Bitcoin banning digital currency is a step back for our economy, or a step back for us as a progressive country, as looking to bring investment into the country for projects or that sort of thing. We need to be innovative going forward as a country, in this kind of space, because this is where we can create value for the country, in my opinion. And I think the government taking steps to put digital currency into to be regulated, and they're only small steps at the moment, regulated, taxed, and things like that, is their way of sort of saying, hey guys, we see you there, we're not going to touch you too much now, we're going to let you grow. And I think they do want to see that long term. I think it's good for the economy.
Yeah, for sure. Between China and the US, I think they both named blockchain a strategically important technology. I think it was last year that both of them started sort of focusing on it from that perspective. And there was also a perceptible change in the regulatory tone, where FATF, sure what it's called, like the Financial Action Task Force or something along those lines, whatever they're called. Yeah. They were releasing a report in about July, and by the time they released their report and had put it together, the tone had already changed to a far more permissive tone, which was kind of interesting. And I think it was because they kind of got a handle that this US-China thing was getting legs, and they needed to sort of open up technology. So from that perspective, it's probably positive. But yeah, it's a weird thing as well, where it's a lot of it's so driven by private enterprise and along almost like anti-government principles. So they really just need to sort of get out of the way and let people do what they're going to do.
Yeah, I mean, from a technology front, I think the bigger threat, more or less, is, and I know this might sound a little bit crazy, but quantum computing is going to be around pretty soon. Ethereum, Bitcoin, they don't deploy crypto-resistant algorithms. And I think someone on the forum sort of mentioned or asked a question about it, and I sort of said, well, look, if the government actually had a quantum computer and it could do all the cryptology like that, they wouldn't tell anyone. They wouldn't know. It'd be like the Enigma machine. You wouldn't tell any other sovereign country that you had that capability to be able to do that. So it will be a long time before people will actually realize that governments had the ability to do this. I don't know how long it will be until that's reality, but, typically the rule is if something's publicly out there as a technology, it's typically probably 2 years behind what's actually, available in the military circles, you know what I mean? Like, so the dark projects. I know getting a bit tinfoil hat here, but you've got to be suspicious about the motives of some of this quantum computing stuff, what it will be used for, and certainly things like cryptology-based projects, as Bitcoin is certainly one of them. The ability to be able to actually deploy the quantum algorithms to decrypt. I've gone through the sort of thought process of what that actually would mean. I mean, what it would mean to the sort of integrity of blockchain and Bitcoin. I'm still a little bit skeptical about it actually has a lot of impact or not. But I think, as we go forward in this space, I think we've got to be conscious about how these technologies are going to evolve in things like quantum computing and being able to deploy these things, and whether it will have an impact on certain projects that we are interested in. I would like to see something like Bitcoin evolve to actually be quantum resistant in terms of its cryptology. It's probably something that people have probably not realized or put on the back burner because it seems to be so far away until that becomes something that matters. But if you're looking at Bitcoin being, the last one been harvested in 2,130 or something like that, I mean, there's a plan for this to be around for a long time. I can tell you right now that quantum computers are going to be around long before 2,130, right? We've got to solve that problem as well. So It's a really interesting part of crypto that we need to look at.
Now, quantum computer is not an opportunity for blockchain, though.
Oh, absolutely.
Where sort of the thing that they do well, and I'm not an expert in quantum computing and don't know barely anything about it, but as I understand it, they can do a particular algorithm very, very efficiently, exponentially more efficiently than traditional computers or whatever. And so should they not sort of be something that could be used to create security for blockchains and to perform hashing algorithms at a much more efficient rate than anything that we've seen so far? So there's sort of there's the initial thing where they could be a threat, but are they not also something that could make the whole thing? They could solve the trilemma. They could sort of make it scalable.
You see that in a small scale with the halving already. Coming up to the halving, a lot of those bigger miners are starting to look at, hey, we need to become more efficient to be able to squeeze profit out of our company or our setups. So, you're already seeing on a completely different scale, but, efficiency is always good for the network, and efficiency in mining is good for the network and the environment, and that can be spun to be good for Bitcoin. So I think that, you can already see in a small scale, the miners they're ahead of the game, they're more efficient, they're producing or getting their hands on the better mining gear. That can only be better for Bitcoin. Secondly, with regarding the whole quantum debate, what I worry about is whether Bitcoin would be ahead of the game or they'll be lagging when it comes to forking to protect themselves. I just wonder how that will play out.
Yeah, and the thing is, no one's saying they've got an algorithm that can defeat quantum, right? Everything's quantum resistant because there's varying degrees of probabilities of something being cracked with quantum, and it does depend on how fast quantum evolves. There's machines out there like D-Wave that purport to have over 2,000 qubit CPUs already, right? That's pretty damn powerful. That's crazy sort of computational power. And you got sort of traditional sort of heavyweights like IBM coming out with 10, 15, 20 qubit systems and doubling almost every 2 or 3 months. Getting to about 1,000 qubit size is incredibly powerful and would be able to start threatening things like crypto in the traditional sense. So the crypto algorithms that are more sort of traditional and not quantum resistant will actually be exposed. But my sort of feeling is it's probably not going to be the blockchains that are going to be attacked first. It's going to be the normal sort of web communications that we have, emails, that sort of stuff, where the current cryptology methods in place will be exposed before blockchain. But look, it just involves being able to adopt a quantum resistant cryptology fork at the appropriate time. And as you said, even using quantum to be actually do the solving for the hashing is actually a certain use case that would be quite beneficial.
I have Harrison from the attendees. He raised his hand. He had a few interesting points on quantum computing, the problems and how we can actually solve them. Hey, Harrison, how are you, man?
Hi guys, how are you? Can you hear me?
Yeah, mate, we can hear you.
We can hear you loud and clear.
Yeah, loving the discussion. I sort of got, I guess, 2 questions. Outlined in the chat a little bit, sort of 2 problems around quantum computing. One I think is a bit more of a problem than the other one. So if in the event that sort of quantum computers get, like number one, the ability to do more quantum operations per second, they become more scalable, cheaper, more able to be deployed by either state level actors or private actors. I guess there's sort of 2 sides of the sword. One is that they can break proof of work algorithms, so they can find solutions to be able to reverse hash functions and be able to mine much faster and in such a way that you can't increase the difficulty of a chain sufficiently to keep up with it. And I guess the other side of the sword is that they'll be able to reverse the private keys that generate the signatures to spend coins. So I guess in my sort of view, the first problem can be solved by upgrading the proof of work algorithm. Whereas the second problem is much, much like order of magnitude harder to solve, because you would need to get all of the existing funds on a chain to voluntarily move their unspent transaction outputs to new addresses that have a new private key derivation system. So I guess that's sort of like the two halves of what do you guys think would be the better way of, I guess, tackling problem two?
I don't know.
That's a really good point, and I never even thought of that, to be honest.
Okay.
It's an impressive question, Harrison.
Yeah,
Thanks.
definitely.
That was more so like my answer to the general quantum mechanics or quantum computing thing. The other question that I had a little bit earlier, which I think I linked a little bit to, is what do you guys think of the on-chain verifiable cash flow sort of new Ethereum level narrative that applies to, I guess, a lot of other cryptocurrencies, where they're doing protocols that have built-in fees. They've got built-in services that they're offering by burning the native currency of the protocol. And there's a pretty interesting article that came out recently where they can actually map the price to earnings of different protocols. And there's actually quite a few in Ethereum already that have better price to earnings ratios than even sort of listed companies like Netflix. What do you guys think about that being a new sort of narrative to drive the, I guess, STO revolution we were all promised never really materialized yet?
It'd be interesting to see how they've put them together. Are they doing a capital appreciation plus staking rewards to get their price?
Yeah, so they take into consideration, I think, the staking rewards and the amount of on-chain cash flow that gets used from the fees to burn the underlying tokens of each protocol.
Yeah, I've shared the article, by the way, there.
Oh, cool. Yeah, it's one of the best. I think it's probably one of the best sort of crypto trading from a fundamental perspective articles that's come out in, I would say, the last year. But I was wondering if you guys have seen that or have any thoughts about it.
I haven't really seen that particular article, but I mean, I'm getting the gist of it. But wouldn't it, I mean, essentially, like token burns specifically, wouldn't token burns just in the traditional world just be classified as share buybacks?
It'd be classed as a share buyback, I guess, in the sense that when there's a share buyback, normally the company then gets to hold their own share, whereas it's slightly separate from a burn where the person sort of undergoing the protocol level service is actually destroying the currency, so there's no new owner of the currency. So I guess there's a little bit of a legal argument to make where it's not as much of a security as a normal security would be, is there's an individual transaction that destroys the currency, where there's no central business that is, I guess, executing the buyback with custodial funds of their holders.
No, it's definitely interesting. I mean, all these are very, very new models we're playing with, and now just seeing them appear more and more. That brings us into the entire world of DeFi, I guess.
Yeah, it's sort of like the gateway towards the end game of DeFi. So initial DeFi is just like proof of concept stuff. Can we make an over collateralized stable coin that's backed by Ethereum or whatever coin we want? And then what can we do with that? Oh wait, we can lend it. We can sort of get people to earn interest for it. Oh wait, now we can make options with it. Now we can make prediction market assets with it. It's sort of the future I see is building protocols that sort of earn on-chain revenue, where there is an on-chain verifiable cash flow. So you might have fees from trading fees. Things like Aave and Bancor are doing this already, where they'll earn a trading fee from their liquidity system or their lending system and actually use that to buy back the native token of their protocol, which gives them efficiently like a price to earnings ratio that you can analyze with even traditional investment mindsets.
Yeah, it's really interesting, and it's something that I'd thought about a bit. I've got a bit of a background in valuing assets and that sort of thing, and I think that tokens were originally caught up in that equation of exchange, where it's like the more popular they are, in theory, the lower price they should have. But obviously, that these things are performing a function, and there's little bits and pieces that you can pinch value from. So users are willing to pay for a transaction. They're willing to pay for a service, and a system should be able to be set up so that you can value all of those things properly, and then create value in a token. So I hadn't seen anything like what you've sent over before, but that's super interesting. I'm going to check that out.
It's such an exciting part of crypto is this constant disruption of the norm, right? and new models being created. It's great from an innovation perspective. The only issue is it's probably moving too quickly for mainstream institutionals to come in and actually adopt en masse, simply because it's just changing so quickly. It's the fear of the technology just taking off. I mean, a lot of these institutions, it takes time for them to spin up stuff and get things going and resourcing and the investment in it. So it's exciting. I love this stuff. I'm a technologist, so for me, this is just yet another innovation I need to read about it. But
Yeah.
at the end of the day, at some point, you're going to have to need some sort of normality in it, so that you have people thinking that they can invest more time and actually not, feel like they have to be constantly in catch-up mode.
I don't think we're really going to reach a point where we're not in catch-up mode anymore. I don't think that this the innovation's not going to slow to the speed where a single person can understand it all, because it's going at such like a fast rate, and the rate is only increasing. I guess because it's like one of the first sort of technological paradigms where there is, permissionless ability to innovate new revenue streams that do not require people to ask for permission, like at any point in the stage. So it's always going to be faster than people can keep up with.
Yeah. Absolutely.
Yeah. A little bit more on the sort of the.
Time.
There you go. Can you still hear me? Yeah. A little bit more on the institutional stuff. I'll shut up in a minute because I've been talking for a little bit.
That's fine.
Yeah. What do you guys think of sort of the barriers to institutional adoption? So like the main two that I see that are being well and truly overcome, or like main three, is number one, there's now lots of options for, corporates to have insured cryptocurrency holdings. Whereas like institutions require that they manage risk in sort of like an efficient manner where they're backed up in the sense that they have insurance on the assets they're holding. There's no way they can lose their keys and lose 100 million worth of their clients' money. There's a lot of different ways of getting insurance on crypto deposits now. And I guess the other one that's sort of been solved a little bit by some of the things that the guys at Gemini, the Winklevoss twins, one of the things they're solving is like the liquidity problem. Because when large institutions come in, they want to make, say, a $10 million order. They can't really do a large order without completely wrecking the liquidity on some poor exchange on the receiving end of it. So like one of the good things that I see coming out of the Winklevoss twins and Gemini is their auction order system. Because like in traditional markets, at the start and close of every day, there's an auction where all the buyers and sellers get matched up into an open and a closed price. Whereas on cryptocurrency, because it trades 24/7, there is no open and close auction. So I guess providing a continuous stream of once a day liquidity big auction events to get a better price with less slippage. I think that's a big institutional change.
And like the gold fix, right?
The what, sorry?
Hopefully not.
Gold fix gets fixed once a day.
Yeah.
London.
Yeah, where there's an auction where all the buyers and the sellers get matched at a single auction sort of clearing price, where there's high liquidity, so you can just put an order there, let it wait for a day, and then it all gets filled at the same time. So that like allows sort of large institutions to make large orders and buy in with 10 mil or sell out of 10 mil without destroying the book and giving the game away. And I guess sort of the third one that I've seen come up recently is I'm seeing a lot more prominence of options. So cryptocurrency options are a very important part of like corporate's ability to hedge price changes. So if you're holding a big position long, you can get an option to like sort of cover your position. Or if you're short, you can get you can buy a call option to offset some of your risk, so you can make all the sort of different patterns of holding options that counteract each other. What do you guys think of the rise in options and things like Deribit?
I think with options and all that, I think with a lot of the things, even a lot of things in DeFi that are happening right now, I think it's less reinventing the wheel and more just bringing all the financial tools that we have at our disposal into the space, because they exist for a reason. I think Tom is pretty interested in that subject. He's talked to me about it before.
Yeah, for sure. Like options and the way they're pricing them, some of you guys will probably be all around this, but it's providing like a second and even third layer to the to the depth of how we're sort of conceptualizing the price. So I think that all of that really cool stuff, and it's providing more layers to price discovery, definitely providing sophistication to those markets. I think all of that stuff's really cool.
Has anyone traded options yet? Crypto options? Scott, Andrew?
No, I've got an FTX account, but I haven't actually taken the plunge.
Yeah, I haven't.
Very tempted.
Yeah, I've sort of seen some of the chain sheets. They've got like really, really, really high implied volatility. So if you're selling if you're selling theta, it'd be good for the people who are like theta gang type people. But in order for traders to get into it, they'll be paying a very high premium on the options. So I guess you would need a little bit more liquidity in the market before the rest of the people come along. But for theta gang, it's pretty sweet.
Yeah.
I guess the options in any of these markets is, the sort of strategies you can do, the straddle strategies and all the other bits and pieces to manage your risk of the price action. And in the case of Bitcoin, it's probably even more advantageous because it's so volatile. If you can get the price for the options. I reckon it might be even, interesting to be able to sell the options, create the options and do those sort of strategies instead of buying them.
Well, yeah, that's a general idea behind selling theta. So you're the counterparty. Instead of buying the options, you issue them and sell them, and you end up over the long term, I guess, like making more money than buying the options because of the historical overvaluation of volatility. Except in cryptocurrency, where volatility is like still very high, people still value it higher than it is.
Yeah.
Thanks for that, Harrison. It's very interesting thoughts, all of them.
Oh, thanks.
I have Jake wants to ask another question. Jake, you're back on.
Yeah, thank you. By the way, that was fascinating, Harrison. Thanks for bringing all those. Just back to the idea of quantum computing and everything where that sort of jumped off. I think that's a really fascinating debate as it rages on, because people keep looking ahead of when do we get quantum computers, what is it going to do, and they sort of look at what that can be and think everything else sort of remains where it is. Whereas you look at things like identity, which is another challenge, right? We've got KYC with exchanges, we've got simple things like that. Well, I'm a US citizen as well. My social security card is a piece of paper with a number written on it. The amount of identity theft that happens in the United States related to that piece of paper is out of this world. And people are using that. They're SIM hacking. They can get your keys. They can do all this stuff with crypto. There are much, much bigger problems with identity theft and everything else that you don't even need quantum computers for today that aren't being solved. So I think it's a fascinating conversation and debate to have about where Bitcoin's going to be in 2140, which is great and it's fine, and all the evolutions that'll take place there. But I think if you come back sort of a little further down the path to something that's probably nearer and certainly getting a lot of attention, if you mention, and forget whether it's Ethereum or some blockchain that doesn't exist yet that deals with sort of smart contracts and lots of other things, you talk to executives in Fortune 100 companies that are technology leaning about identity, their ears prick up. They don't care about store of value. They don't care about immutability or value or anything like that. You solve a problem. I don't know who my customers are. How do I verify them? How can somebody on my side be verified as somebody they can trust, whether it's a doctor, a consultant, an agent, decentralized workplaces? A lot of these things with the internet are really sort of compounding how that shift will change. Whereas how do we know each other? And, I've got a history in digital ad tech and building things like that. So in exchanges, trying to verify a publisher, an auctioneer, and then a buyer, those parties on those exchanges, that's troublesome enough as it is. But there keeps coming back to this idea is if you can verify who you are with a set of keys or with some sort of identity, there's something there. But not only does it apply in a B2B scenario, on a consumer level with banks and everything else, it's fascinating what you can do with that. And that would really help pave the way for where you can go to tackle things like quantum computing in the future. What do you guys think about that?
Yeah, I think I sort of inferred before about Web3 and identity coming online now. So I'm just trying to work out how I can pass a website reference on Zoom. I might post it if I can as a question. Point you to a
Yeah, you can into the chat. You can just post it directly into the chat.
Okay, I'll do that once I've finished talking. But there is like companies like Sovereign that are doing exactly that, solving those particular problems for KYC, allowing incredible amount of protection when needed in terms of the identity and privacy of a person, but allowing very as much detail as you permits to third parties for a period of time. So, whether it's something as simple as your qualifications or any of that sort of stuff, which is really important in certain transacts, on e-commerce or whatever else. Having those things been able to be permissioned to certain parties for a period of time for a certain purpose, and then having them revoked or controlled that way is a really powerful form of identity that's been missing for a long, long time in the internet. And it could apply equally to blockchain just as well. I'm quite optimistic about that problem being solved over the next 3 or 4 years. And I think it will come down to the fact that because some of this has been defined as a web standard through the Triple W Consortium, defining it as a standard that all the sort of native browsers, web browsers will adopt means it will probably take off as a technology paradigm. And I think it's what we need. I mean, at the end of the day, identity theft. I feel sorry for the guys in the US about Social Security because I know it's such fraught with fraud. So easy. We don't have necessarily the same level of exposure that you guys do in the US here in Australia, but I can imagine it's tough. It's tough.
No, yeah, definitely the US. Okay. We're getting towards the end of this. I'm going to start wrapping it up now. Anyone have any final questions? Any final thoughts? Okay. So let me just wrap this. Okay, so thanks everyone for attending this. Thanks Scott for joining us. Thanks Andrew, Tom, Claudius. On again in 2 weeks, everybody, as usual. Don't forget to follow My Digital, follow us there to get more updates on this and to get the recording of this. The mining store Discord is up there if you want to stay in touch with anyone. You can find it all there. The panel in 2 weeks is going to be for crypto hedge funds. I have a bunch of traders who are going to come on here and argue with each other. Some of them believe in technical analysis, the other ones don't. And we're talking about big traders. I mean, position sizes, the size of my home equity. So yeah, this should be interesting. Thanks everyone for attending, and we'll see you in 2 weeks.
Great.
Thanks,
Good.
Thanks, everyone.
See you.
Take care, everyone.
Cheers.
Yeah.
Cheers, guys.